Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Leggett Platt is a company founded in 1883 that specializes in manufacturing components for the furniture, textile, and automotive industries. It employs 19,300 people and operates in the United States, Europe, China, Canada, and Mexico. The company's market capitalization is approximately $1,340 million, with its stock price around $10. The company's financial results for the fourth quarter of 2024 showed earnings per share of 21 cents, a decrease from 26 cents in the same quarter of the previous year. Revenue declined by 5.3% year-over-year to $1,060 million. Projections for 2025 indicate further declines, with revenue expected to be between $4 billion and $4,300 million, which is below analyst expectations. The company reported an annual loss of $511 million, and its trailing 12-month earnings per share stood at negative $6.01, raising concerns about its ability to sustain operations without additional financing. In terms of valuation, the price-to-earnings ratio cannot be calculated due to ongoing losses, and the average analyst target price is $12. Despite financial struggles, Leggett Platt offers a very high dividend yield of 10.2%, although maintaining it in the long term may prove difficult. Technical analysis indicates a support level at $9.72 and a resistance level at $10. The average purchase cost is $10.89, suggesting that many investors might be at a loss at the current price. Macroeconomic conditions suggest that the economy is in a recessionary phase, meaning that the best investment opportunities are in the healthcare, consumer staples, and utilities sectors. The furniture and textile industry, in which Leggett Platt operates, typically performs poorly during economic downturns. An additional risk factor is the trade tariffs imposed by the United States on imported steel and aluminum. A 25% import tax now applies to all such materials, including those from key allies like Canada and the European Union, marking a significant escalation in trade barriers. For Leggett Platt, the impact of these tariffs is mixed. On the positive side, reduced competition from imported steel-based products may boost domestic manufacturing and strengthen the position of U.S.-based suppliers, such as Leggett Platt. Additionally, increased demand for domestic steel may allow the company to maintain a more stable supply chain if it sources materials locally. However, the downside is that higher raw material costs could lead to increased production expenses, squeezing profit margins. Since the company operates in Europe and Canada, access to cheaper raw materials from these regions may become more difficult, potentially forcing the company to raise product prices, which could hurt demand in an already weak consumer environment. In summary, Leggett Platt is in a difficult position. On one hand, its stock price is near historical lows, and its high dividend yield may attract income-seeking investors. On the other hand, the company is facing financial losses, declining revenue, and operating in a struggling industry. The tariffs on steel and aluminum present both an opportunity and a challenge, depending on whether the company can capitalize on increased domestic demand or whether higher costs will further erode profitability. Given the current economic cycle, holding cash or investing in more defensive sectors may be a better strategy. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, Number 596/2014 of the European Parliament and of the Council of April 16, 2014 on market abuse and the Commission Delegated Regulation, EU. 2016/958 of March 9, 2016 Supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.